of course, now, we're far enough into the gold bull market that that's actually the best performing asset of the last 3 years. That's better than stocks and better than bonds. So it's easier now. Real assets will tend to hold up very well in what's coming. And that's how you want to protect yourself going forward. So, the mining stocks that still haven't really taken off, even though gold has
Yeah.
had this great run, the best quality gold miners are universally three baggers to 10 baggers out there. More so for the silver miners, because first
Right.
of all, there's fewer of them. There just aren't that many good silver miners out there. So, you get kind of tech stock slash NVIDIA action from the best chosen precious metal stocks going forward. That's a lot of fun. That's life-changing money.
Yeah.
But the big thing you want to be doing is protection, and
Yeah.
that's physical.
Silver has long lagged behind gold, but momentum is finally shifting. John Rubino, author of a Substack newsletter, notes that just as gold took years to break through the $2,000 barrier before skyrocketing past $3,000, silver may now be on the verge of its own breakout. Recently, silver spot prices crossed the $35 per ounce resistance level for the first time since 2011, a significant technical development that has renewed bullish sentiment after a long period of subdued performance. This upward movement has prompted a wave of expert predictions, anticipating a massive rally ahead. The gold to silver ratio, a measure of how many ounces of silver it takes to buy 1 ounce of gold, has recently climbed above 100 to 1. Historically, a ratio above 80 to 1 has been seen as a signal that silver is undervalued relative to gold. The fact that this ratio has remained above that level for months now indicates a significant accumulation of upward pressure on silver. Rubino notes that gold typically leads in the early stages of a precious metals bull market, acting as the primary safe haven asset. As gold prices rise, the gold to silver ratio increases, drawing investor attention to silver's relative undervaluation. This dynamic often triggers strong demand for silver, which then tends to outperform gold in percentage terms. Seasonally, June tends to be a challenging month for gold, however. According to Rubino, key turning points often occur around the end of June or in early to mid-July. Historically, these periods have set the stage for strong summer rallies in both gold and silver. Adding to silver's bullish outlook is its structural supply deficit. The metal is now in its fifth consecutive year of deficit, with limited new mining capacity coming online. This tightening supply, coupled with growing demand, particularly from the green energy and technology sectors, is laying the groundwork for a long-term revaluation of silver. Investors are increasingly viewing the metal not just as an industrial commodity, but also as a strategic monetary asset with substantial upside potential. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
It's about time. This was a really long wait for silver because gold kept us waiting for a while too, but it's been gradually going up. We had that, excuse me, about a 4 year long stretch when it bounced off of $2,000 an ounce and bounced off it again and again. And it kept hitting resistance there. And it finally broke through, and now it's in the 3,000s. So overall, even though that was a long wait to break through 2,000, gold has done really well for the stackers out there because instead of bouncing off of 3,000 for another 3 or 4 years, it just broke right through. And who knows what the limit is now. Now, as for silver, this is kind of an elongated version of a typical precious metals bull market. Usually it's gold that moves first because gold is the big name in safe haven assets. And when somebody gets scared about what's happening in the world, they always go to gold first, or they
Yeah.
usually go to gold first. And so gold moves first. And then the gold to silver ratio starts to really widen out. And you get up into the 70s and 80s. In other words, it'll take 70 or 80 ounces of silver to buy an ounce of gold. And then eventually, people notice silver, realize how cheap it is compared to gold, and start buying it. And then for the last few years of the precious metals bull market, silver outperforms gold by several hundred percentage points. And this feels like another one of those precious metals bull markets. We had one in the 70s, one in the 2000s, where it played out pretty much the way I just described. And now, after a long wait of gold gradually rising and silver just languishing, silver is starting to outperform gold. And we did have a 100 or 105 gold to silver ratio at one point in the last few weeks, which is a screaming silver buy signal. So If past is prologue, then we should be preparing for some really wild times in silver. No guarantees about anything, but the last two times we were here, what happened in the next few years was phenomenal if you owned a bunch of silver. So, here's hoping. And one of the nice things about this current situation is that the silver miners haven't had their big runs yet. Normally, precious metals miners are, they call them leveraged plays
Right.
to the metal. And that hasn't completely happened yet with silver, where the miners are dramatically outperforming the metal. So there's still some silver miners that are relative bargains and that might still be, five baggers or 10 baggers when silver becomes a three bagger. And, we still might have that part of the process to play out. And if so, there's still a chance to make some serious money here. Farmland and gold and silver and rental houses and pretty much whatever governments can't just make up out of thin air,
Right.
we convert our capital into. That sends the price of those things through the roof, which manifests as inflation, which is to say the value of the currency relative to those things plunges in an uncontrollable way. And that's the end of the process. At some point, then governments have to either admit that they've screwed up the currency to the point where it's irredeemable, or watch it just evaporate completely. And there are, examples of this happening throughout history.
Yep.
Google list of hyperinflations, and you get a whole page of, brand name countries that you've heard of who,
Yeah.
at one time or another in the not too distant past, just ruined their currencies. So the difference this time around is that we're doing it globally. It's not one country borrowing too much money, printing too much currency, and crashing the value of their currency in the context of a global gold standard.
Right.
It's everybody on a fiat currency standard doing the same thing at once. That's what makes this such a fascinating time because the numbers are so much bigger. And there's no real system to step in and fix an individual country because everybody else has the same problems. So I think there's a very good chance that where in the past gold and silver went up dramatically, thousands of percent
Right.
versus the local currency. I think there's a chance of that happening again, but on a global scale, where basically every currency starts to evaporate, which is to say, gold starts to go parabolic and starts to point towards infinity in a lot of different countries at the same time. So
Right.
fascinating times. Of course, now, we're far enough into the gold bull market that that's actually the best performing asset of the last 3 years. That's better than stocks and better than bonds. So it's easier now. But real assets will tend to hold up very well in what's coming. And that's how you want to protect yourself going forward. So, the mining stocks that still haven't really taken off, even though gold has
Yeah.
had this great run, the best quality gold miners are universally three baggers to 10 baggers out there. More so for the silver miners, because first
Right.
of all, there's fewer of them. There just aren't that many good silver miners out there. And they haven't had huge runs yet. So, you get kind of tech stock slash NVIDIA action from the best chosen precious metal stocks going forward. And that's a lot of fun. That's life-changing money.
Yeah.
But the big thing you want to be doing is protection. And
Yeah.
that's physical. You want to own physical gold and silver. You want to own actual productive land. And you can't own oil wells very easily unless you're a multimillionaire. But you want to own super high quality energy stocks. And those things are your protection. So,
Yeah.
in my Substack, I've got kind of a mix. I've got some really speculative little gold and silver explorers, and then a lot
Nice.
of, uranium stocks and copper stocks and oil drillers, and those are the things that ought to protect us going forward. And they'll make money. They'll go up.
Another factor supporting precious metals is the continued easing of inflation in the United States. The release of May's Consumer Price Index and Producer Price Index figures indicated a softening trend, which has bolstered expectations for interest rate cuts by the Federal Reserve. Additionally, a recent University of Michigan consumer sentiment survey showed that while households are becoming more optimistic about the economy, concerns over persistent price pressures remain. Geopolitical tensions also continue to influence market sentiment. U.S. President Donald Trump suggested that Iran provoked the recent conflict as Washington issued fresh warnings about Iran's nuclear ambitions. These developments have fueled safe haven flows into gold, reinforcing its role as a protective asset in times of uncertainty. Looking ahead, traders are focused on next week's Federal Reserve monetary policy meeting, where updated economic projections are expected. Alongside this, key data releases, including retail sales, industrial production, housing, and employment reports, will likely play a significant role in guiding gold's short-term direction. JohnRubino emphasizes a longer-term risk to fiat currencies, warning that a so-called crack-up boom could be on the horizon. In such a scenario, eroding confidence in paper money, exacerbated by persistent inflation, may lead individuals to aggressively shift into hard assets like gold, land, and natural resources. According to Rubino, this rush could trigger a collapse in the currency's value, ultimately forcing governments to adopt more disciplined fiscal and monetary policies. As inflation continues to erode purchasing power, the urgency to seek safety in tangible assets grows, and gold stands out as one of the most compelling options. Let's get back to the interview.
Well, first of all, the whole Doge thing was very exciting. You know, Doge did a lot of good things. They uncovered how the government and the political class were basically running a money laundering scheme. You know,
Yeah.
most of these NGOs and but basically every other entity that's out there was in some way or another laundering taxpayer money and enriching themselves at the expense of everybody else. So that's exposed, and that was a really good thing. But there was never a chance of Doge coming up with $2 trillion a year in spending cuts. That's, you know, because the government spending is taken up by interest, which we can't control other than by cutting interest rates.
Right.
The military, which nobody on either side of the aisle wants to scale back dramatically because they love being able to have all these weapons built in congressional districts where everybody makes money. You know, they love that. And they love having the most powerful military in the world. So the military can't be cut. Social Security and Medicaid are next. And there's not a chance in the world of baby boomers taking a big cut in their benefits. That's my generation. So I speak with authority here. We would never let that happen. You know, there's no way you cut baby boomers' entitlements. So that leaves basically, you know, school lunches and a few other things like that that nobody wants to cut either because it's just cruel and it doesn't save much money. So there was no
Right.
way that we were ever going to take a big chunk out of government spending. So Doge succeeded as well as we could have ever really expected it to succeed, but it created unrealistic expectations. And so a lot of people see it as a failure, but you know. And so the big beautiful bill is basically what you should expect from Republicans because they don't want to cut spending either. The government spending and deficits have gone up pretty much as much under Republican administrations as under Democrat administrations since the days of Ronald Reagan.
Right.
You know, it's you got to go back 40 or 50 years before anybody actually cut any government spending in any legitimate way. And even in the Clinton years, in the 1990s, we actually had surpluses for a little while, but it was a scam, which we probably don't have time to get into, but that was something that wasn't what it looked like it was. So we've never really had governments controlling their spending. And that's a very important thing to understand because there is never a chance for governments to control their spending in a fiat currency environment. If you give them the ability to create money out of thin air and to borrow as much as they need to do whatever they say they need, they're always going to do that. And as long as we're running fiat currency systems around the world, we're going to increase government spending. We're going to increase debt. The interest costs on the debt will continue to go up until the system blows up. And it will only be when the markets take that power away from governments by just giving up on these fiat currencies that we actually get a chance to set up a system where governments live within their means and debt is manageable. Those days for this system are past. But I will say that we seem to have entered the death spiral part of this process because we got a bout of inflation in 2023, which scared everybody around the world into raising interest rates to try to combat inflation.
Right.
Now, those higher interest rates are now causing the interest cost of everybody's debt to spike. So all the big governments of the world that have been borrowing with impunity because they were paying such low interest rates have seen their interest rates go up, and now their interest costs have gone parabolic. With the US, we went from 300 or 400 billion dollars a year in interest expense on our debt to $1.5 trillion in the blink of an eye. And so that money, of course, that interest expense has to be borrowed, right? Because
Right.
we're already in deficit, which means every succeeding year's deficit is going to be bigger and bigger. Interest costs are going to be more and more onerous, and so on, until the system does just blow up. And by blowing up, I mean something like a crack up boom, where people just give up on the currency. They understand that it's the government's policy to inflate away the currency, to make it worth less year after year after year.
Silver's recent resurgence appears to be more than just a short-lived rally. It reflects a confluence of factors that could sustain its upward trajectory. From a stretched valuation gap with gold to multi-year supply shortages and evolving global tensions, the conditions seem ripe for a re-evaluation of the metal's role in both investment portfolios and industrial applications. Market behavior indicates a shift in perception, where silver is no longer viewed merely as a secondary metal, but as a strategic asset with long-term value. With monetary policies potentially shifting and economic indicators signaling change, silver may be entering a period of renewed relevance. Do you think silver's changing market role will lead to a significant repricing in the coming quarters? Or is this just another cyclical upswing in an otherwise volatile market? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.